Stocks swing between losses and gains on mixed global cues and a rapidly evolving geopolitical situation. Metals and industrials gain while utilities and IT drag. Eicher Motors revs up growth with strong sales and market share gains even as it compromises a little on margins. While some analysts fret over valuations, others bet on gains from premiumization. Muthoot Finance slides despite a strong performance as concerns over the impact of draft RBI norms on gold loans and volatility in gold prices weigh. The management hints at growth well above its guidance. Gold slides sharply to below $3,150 per ounce as trade tensions ebb and US expands ties with the Middle East, also lifting sanctions on Syria. A weak inflation print also aids the fall. Silver too slips. Good afternoon, you're watching us here on Halftime Report. I'm Mangalam Malu, with me Ekta Batra. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. It's been an interesting day because of the consolidation that we've seen. At the top of your screens, you can see both the sensex as well as the Nifty lower by a smidge. But remember, from the lows, we've seen a rally of almost 140 points on the Nifty. From the highs, we've seen some supply as well. So around the flat line is where we're consolidating, with the broader markets doing a lot better, Ekta.
Hi, Mangalam. Yes, absolutely. You know, the mid-cap index is just about holding with a gain of around 0.14% at this point in time. We have the advanced decline ratio, which is holding at around 2:1, so no problems coming in there. Let's see whether this sustains. It's a lot about specific stocks today, so just want to point out stocks such as Piramal Pharma is down around 4% at this point in time, so we will be talking about the numbers very soon. But besides that, we also have a couple of other stocks such as Brigade Enterprises, which is down around 2% Newland Labs, which comes out with its numbers today, is down around 3% On the upside, a couple of the defense stocks continue to see some amount of interest. So Paras Defense is now up around 4% Mazagon Dock Shipyards is up around 3.5%. So that seems to sum up what's taking place in the markets at this point. But we have a lot of numbers to reckon with. So let's kick off the show, Mangalam, with Jubilant Foodworks.
Well, Jubilant Foodworks was a good performance that came in, but a large part of that was already factored in, which is why the street is, in the mood for profit taking on that stock. Valuations are a bit of a concern as well. But no real problems for as far as, these numbers were reported. 34% growth in their consolidated revenue. That's something that the company had given in the fourth quarter update itself. Standalone revenue growth coming in at 19%. So what is it that the street was trying to make an estimate for? It was the EBITDA, margins and net profit. On all those three counts, the company has actually outperformed expectations. 305 crores on the EBITDA versus expectations of 277 crores. That's flown down to the margins, which are about the 200 basis points beat, and the net profit as well. Fairly handsome beat as against street expectations. We also have the gross margins of the company this time around lower by 200 basis points. But because of the operational efficiencies and the operating leverage in the company, they managed to curtail other expenses and employee expenses, leading to the EBITDA margin staying flat year on year. So the key internals which really stand out. Domino's like-for-like growth has come in at 12%. The order growth of 24% has been higher across all tiers. And like-for-like growth in delivery has been 22%, whereas dine-in channel is flat versus last year. So the good part is delivery continues its growth. It's accounting for about 73% of their revenues. And we have the dine-in channel, which is absolutely flat. So over the last few quarters, we had seen a bit of a decline out there. That decline has been arrested, perhaps on account of the initiatives that the company is taking with regards to, sending value offers in dine-in. They have a 99 rupee lunch offer, etc. Let's look at the market, however, and continue looking at a couple of these stocks which are spiking as we speak. And as we wait for another management to join us on the show, Macrotech Developers, that's one stock which has been doing well all through this week, up around 10% this week and currently at the high point of trade. We're also seeing some traction in names like Yes Bank, which continues to do well ever since the Sumitomo deal was announced, and a couple of days before that as well, on the back of the buzz of that deal taking place. In the absolute broader markets, where you have, the cash stocks, Zaggle Prepaid really stands out. Was up 7-8% in yesterday's session, is up 8% today, once again, taking the weekly gains to 26%. The management joined us here, post their numbers, and they did guide for strong growth this year, 35 to 40% growth on their top line, with margins moving towards 10 to 11% in the second half of this year. So that's a positive. And Tilaknagar Industries continues to do well on the back of good numbers yesterday.
Yes, absolutely. Quite a vibrant market in terms of specific stocks. So that seems to be the key theme that is playing out today, that the indices itself are consolidating, but we have specific stocks which continue to be in focus. Just want to point out BLS Services also, which is showing quite a lot of traction on the volume as well as the price front. So that stock is up around 14.5% at this point in time. And it's gained around 31% for this week. So do watch out for that one. Popular Vehicles also doing well, so up around 4% for that particular counter. On the downside, like I mentioned, there are a lot of the pharma/diagnostic stocks which are under pressure today. So Piramal Pharma post numbers, Newland Labs which comes out with numbers, RT Pharma which is down around 1.5%. Vijaya Diagnostics, which has lost around 8% numbers this week. That stock is down around 2% at this point in time. So it is a lot of these stocks, including even something like an Ipca Labs, which is down around 1.2% at this point. But nonetheless, we have a lot more numbers to reckon with. E-Clerx is buzzing in trade on the back of gains of more than around 8% on the back of its Q4 numbers. Vinny's here with more.
Hi, afternoon. Thanks so much for that. So what we're seeing in terms of E-Clerx, a strong performance coming in Q4 FY25 from the company, beating the analyst estimates that were there on the street. Dollar revenue is seeing a growth of around 4.17% on a quarter-on-quarter basis, coming in at $105 million, while in terms of rupee revenue, that's seen a growth of around 5% as well. EBIT margins almost slightly flattish, 19.7% versus 20.1%. The key highlight is that the ACV deal wins for the company was at $51.2 million, which is at an all-time high, 54% uptick on a quarter-on-quarter basis. Top 10 clients grew by 7.3% for the company. Emerging clients, that has also seen a good growth. So overall, a very strong performance that we've seen coming in from the company on a sequential basis as well. And deal wins, that is something that is exciting as well.
All right, deal wins were exciting, but let's talk about the quick service restaurant space. We just spoke about Jubilant Foodworks. They did about 12% like-for-like growth. Will the burger space be as exciting going forward or not? There is gradual improvement. We've seen, on a base of negative 5%, same-store sales growth of plus 0.07% for Westlife. And the previous quarter was a 2.8%. Again, the base was a lot more favorable as well. Akshay Jatia, who's the president and CEO at Westlife Foodworld, now joins in. Akshay, thank you so much for joining in. The last couple of quarters, you've seen a smidge of an improvement, and you have your target of high single-digit same-store sales growth. What are you doing to, propel that sort of growth? What is it that you're doing to revive demand at a time when consumption is slightly weak? Is it because of weak overall consumption scenario, or people generally moving away in the metros from, say, quick service restaurants, staying away from unhealthy food, etc.? Is there an underlying macro trend? Just wanted to understand what is it that is happening in the marketplace, and what are you doing to revive demand to that targeted high single-digit same-store sales growth?
Thank you for having me. So I don't think that, growth is not coming back, in the sense that from a macro point of view, we are seeing a marginal increase, in terms of habits, in terms of people eating out. And here at Westlife, our biggest focus is to ensure that, the customer gets that what he or she wants. So I think number one, we're focusing on ensuring that we give a great value for money offering to our customers, whether it's across, different ranges of products, or even, across beverages like McCafe. So, we've been very successful in doing that over the last few quarters, and we are seeing momentum come back into the business. Number two, we're also ensuring that the experience that customers get in the restaurants is superior. And we do think that brands like us, Westlife, will continue to perform well as we keep offering these experiences to our customers at the quality that we offer them at. So we're very confident that as macro growth is also reviving, we are doing what it takes to ensure that Westlife Foodworld gets back into the positive trajectory and moves towards the Vision 2027 that we've set.
Okay. Can you give us a sense in terms of what the geographical breakup was like for you this quarter? How much did you do in terms of your key geographies when it came to revenues?
So we don't break it up by geography in terms of exact numbers. However, what I can say is the West is a region where we've established very strong brand connect. And as a result, we have seen strong momentum in the West, especially cities like Mumbai, Pune, and states like Gujarat, where a lot of our offerings have now started bringing strong momentum into the restaurants. In terms of the South, which is our second key region, we've done a lot of work in terms of building that relevance with the customers. And while it does lag a little bit, we are seeing momentum there as well, especially in cities like Hyderabad. And we're very confident that with the right offerings, with the right brand connect, we will see that momentum come back in the South as well. And as a result, we're confident about delivering that SSSG momentum that we've committed in Vision 2027.
All right. So I guess the reason why I wanted to know is because you had this target of moving west and south to about 50% of your revenue as well, currently more skewed towards the west, as you earlier pointed out. So as that happens, and whenever that happens, for this year in particular, FY26, what are you looking at when it comes to revenue growth, same-store sales growth, and margins? If you could give us a sense.
So again, we don't give year-on-year forward guidance. Vision 2027 remains our marker in terms of overall guidance. But what I can say for the current year in terms of indication is that we definitely want to get back to that trajectory of mid to high single-digit SSSG, and all effort is there in terms of bringing that momentum back into our restaurants. And even in terms of margin, as we see operating leverage play out, we're doing a lot of solid work in terms of cost savings as well as pro mix in terms of reviving those as well. So we are quite confident that FY26 will be the start of that trajectory that we require for Vision 2027.
Okay. Give us a sense in terms of, what the addition would be in terms of stores going forward. What is the capex that you have lined up? And, since we did speak about maybe demand still, on the cusp of reviving, is there any change to your capex plans?
In terms of number of stores, the guidance again remains that by 2027, we plan to be at 580 to 630 restaurants. Obviously, that implies that our range will be between 40 to 55 restaurants over the next couple of years. And in that context, our capex remains more or less similar because we are doing a lot of work in terms of also optimizing our capex as we are opening more stores. So capex will be in the range of 200 to 250 crores year on year. But again, funded through internal accruals and ensuring that return on capital remains our primary marker of guidance.
What about McCafe? You aspire to have about 15 to 18% of your revenues by 2027 coming in from McCafe. Where does that number stand? And does your entire network now have a McCafe?
We're moving closer towards it. In fact, obviously, our internal aspiration is to beat that because you are seeing the coffee market explode, and us being leaders in terms of both, quality cup of coffee as well as in terms of presence. We, have exactly what it takes to take advantage of that macro growth. And adding, to answer your question, we've covered almost 100% of our network with McCafes.
And what about paneer? There is a fair amount of outrage on social media around paneer, and India has a fairly large vegetarian population. I'm vegetarian myself, and I constantly wonder whether the paneer served at all these quick service restaurants, is it fake or is it real? There's so much clamor around this. Earlier it was cheese, now it is paneer. How do we stay confident that everything that is served in all these quick service restaurants are healthy? At least, if not healthy, the real thing.
So I can assure you myself that, the paneer is made of 100% milk. In fact, our quality standards at McDonald's, I say this as a very health conscious customer as well, are at the highest level. And if I was to eat out, it would primarily be at a McDonald's because I know what goes into our food is the real ingredients, and even our process of making the same is at the highest levels of quality, versus many other, areas of eating out that you may venture at.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in, Akshay. And let's, touch base for a longer conversation because there seems to be some structural shift taking place in the Indian market, considering that there's a huge influx of weight loss drugs which will come through. So whether or not the same model is going to survive or not when it comes to fast food is something that we can discuss at a later time. We'll take a short break, but up next we'll focus on the IT sector with Sandeep Agarwal, Fund Manager at Sowilo Investment Managers. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, Persistent Systems has slipped in trade as analysts say the top client, United Health, is in trouble. Sandeep Agarwal, who is a fund manager at Sowilo Investment Managers, joins in with his take on this. Sandeep, hi, welcome to the show. Well, if we could just start by talking about this issue with United Health. Have you looked at the news, and what kind of impact do you think it could have on a stock such as Persistent?
Hi, good afternoon, and thanks for having me on the show. So, we run a PMS and our clients hold some of the stocks, so it will be very hard for me to comment on any particular stock. But let me put it this way that, there is a lot of disruption going around in the healthcare side in the US market, and also there is some disruption going on in the auto and manufacturing pieces in Europe. And that's the reason the R&D companies are seeing very volatile numbers. Some of them are seeing very good numbers. Some of them are seeing little poor numbers. And I think this volatility will be there for some more time. And wherever, there is a combination of disappointment due to volatility along with higher valuation, we have seen the stocks getting corrected.
So in a situation like this, what is it that you're doing? Because, what we understand is it could be a little more than 10% of revenues for Persistent and a little more than 3% for Wipro as well. I just wanted to know if those estimates are correct in one's understanding. And if that was to happen, could there be some more uncertainty here? Is that revenue at risk?
So I will tell you generally what happens. I have seen this during 2 decades of my working in this sector, that, a particular client's revenue could be X percentage, but out of that, generally not everything gets impacted. A certain portion of that gets impacted unless the client has gone for bankruptcy or the client has completely shifted to a new client or those sort of things happen, which is not clearly the case right now. So so in this kind of situation, generally a portion of the overall contribution which comes to the revenue does generally get impacted. And remember that, it is not permanently impacted. Once this thing settle down, then, they come back also very strongly. We have seen this multiple times, not exactly same kind of issues, but different kind of issues which have paused spends for some time, but they have come back very strong after some time. Because see, this is the lowest possible price at which you can execute. So generally, the execution of outsourcers doesn't get cancelled or totally. It only gets delayed by some time. The worst hits are one which are which are the front end discretionary ones where the rates are very high and they are nearshore vendors. Those get hit very hard.
Okay. What do you, while we can't talk stocks, what do you think is the impact on a larger number of IT stocks because of this particular piece of news? Do you think it's limited, or do you think that is going to have a widespread impact?
I think, see, there will be impact, but this impact, prima facie, the issue which has cropped up, this impact is a time impact and not a actual loss of revenue. It will be postponement of revenue. So maybe 3 to 6 months, you will see some postponement, but I don't see as a permanent impact because, in the US healthcare, we are very deeply entrenched and we are the lowest cost executioner there. So we have not seen any impact for longer term in US in last 10 years in the healthcare sector. Anytime this kind of issues have happened, it is company specific and generally it remains for 1 or 2 quarters and then, it starts normalizing.
So as a PMS owner, are you looking at this as an opportunity to increase your stake in these companies, or are you looking at this as an uncertain time, so maybe reduce some weight and perhaps get back when the things are looking a little better?
So Mangalam, we were massively overweight IT last year in August when, there was gloom and doom. All the stocks were trading like at a very, very low valuation. And since last 4-5 months, we have clearly said our view also. on national channels that we are cutting down our IT weight. We are not comfortable at these valuations because see, this is a sector where large caps can grow between 5 to 8% on a regular basis, and the good quality mid caps maybe 10 to 14%. And for that, giving a PEG ratio of more than 3 times, 4 times is very difficult for us. We are very, very value conscious fund. So we have trimmed down our IT position in a very, very significant way in last 4 months. And we have very minimal position now. We will enter when we find that, the risk rewards are favorable and the valuations are little reasonable. Right now, the rally which has happened is broad rally. I think that, this year will be a weak year for IT. I don't see big numbers coming in this year.
Okay. All right, Sandeep, we're going to leave it on that note. Thanks very much for your quick take and for joining in and telling us about your thoughts with regards to the IT space. We'll take a short break now. Aditya Agarwal of Invest for Edu will join in with his trading call. Stay tuned.
Welcome back. You're watching us here on Halftime Report. It's absolutely flat for the market, so fair amount of consolidation. It's also weekly options expiry today. So let's look at how the markets have fared so far in at midday. So if you look at it, the key indices, Nifty as well as sensex are absolutely flat. The Nifty Bank is a slight underperformer. The mid-cap index is an outperformer. The Nifty high-low today tells you the range that the street is working with. Yesterday we had pointed out that at lower levels, at 24,500, there would be some support. At high levels, there would be some supply. 24,808 is today's high. 24,500 is today's low. The Nifty Bank is meandering around the 20-day moving average of 54,695. The advanced decline will make your portfolios feel a lot better because a lot of stocks are gaining as against the number of stocks which are declining today. And if you look at the active options today, though no one's betting on a big move on either side towards the end. 24,600 put writers, fairly active, telling you 525 is an important support. 24,550 put writers also. So 24,500 to 24,525 is a support. On the way up though, 24,800, which is today's high, will continue to see some supply. That's what the 24,800 call writers are hoping for. A lot of long positions added on names like Hero MotoCorp and JSW Steel, whereas we are seeing some shorts added on Muthoot Finance. So we'll keep an eye out on that, Ekta.
Okay, all right. Aditya Agarwal joins in now to discuss all his calls for today. Aditya, hi, welcome to the show. Well, it seems as though it's going to be a lot about specific stocks today. So let's start with that, your specific stock strategy.
I've got a couple of buy recommendations, Ekta. Hi, good afternoon. Thanks for having the show. Given that markets are consolidating right now, I don't see too much of a downside or an upside. So as you mentioned, it's more of a stock-specific idea. So DLF is a buy for me. I'm seeing a good up move in all the real estate stocks. It's broken out from a downward sloping channel. So for me, DLF is a buy for a target of 750 on the upside with a stop loss at 680 on the downside. Trent is another stock which is looking very interesting to me, and it's just making a move towards that breakout point of 54.60. So I think Trend can also be bought at current levels for a target of 5600 on the upside with a stop loss at 5300 on the downside. What is the most comforting factor for me, Ekta, is the fact that VIX is now correcting and it's comfortably below that level of 18. So I think matter of time before you will see a short covering rally on the market. Not too much of a downside from here, and that can lead to a good short coming rally in all these stocks which have been beaten down of late.
And individual stocks, what are you liking?
So a couple of them, Mangalam, DLF and Trent. DLF is a buy for a target of 750, a stop loss at 680 on the downside. So from the real estate pack, DLF is something that I like. Trent is also something that is on my radar. It's on the verge of a breakout from a downward sloping channel. So for a target of 5600, I'll buy with a stop loss at 5300 on the downside.
Take that point. Thank you so much for joining in. On the other side of this short break, we have the management of Piramal Pharma talking about their fourth quarter numbers.
Welcome back. Well, very quiet for the markets at this point. So we have the Nifty, which is just about lower by around 25 odd points. The Sensex, which is down by around 149 odd points. In terms of specific stocks within the Nifty space, Hero Motors doing well. So that stock is up around 4.8%. It's gained around 10% this week. We have Tata Motors, which is following suit. So both these stocks have been in focus this week on the back of news, up around 3 odd percent for that particular counter. A couple of others on the downside, which you should probably really watch out for is Cipla, which is down for another day in the row. So that stock is down around 1.2%. Remember that the conference call takeaways were a bit subdued. So the street is a bit skeptical about growth post-Revlimid generic for Cipla. So that stock is lower. Dr. Reddy's is also down around 0.7%. A couple of other stocks, Power Grid, IndusInd Bank, NTPC, Infosys, all of these stocks are currently in the red as we speak. From the broader markets, we've been pointing out that as of now, the mid-cap index is holding with a gain of around 0.13%. But let's focus on a specific stock then. Piramal Pharma reported what was a strong margin recovery sequentially, while profit also saw a strong growth. I did catch up with Nandini Piramal, chairperson at Piramal Pharma, to discuss their Q4 performance and began by asking about the key trends in the CDMO business in the quarter gone by.
Overall, the last 2 years actually have been very good for the business, and I would urge people to look at the yearly year-on-year revenue, where we've actually grown 14% over the year. So I think we've had good, we've seen a 500 basis points improvement in the EBITDA margin for the year, and we've actually seen a turnaround in the net profit. So, we had a 190 crore loss in FY23, and we've seen a 90 crore profit in FY25. We've also reduced our net debt a bit to EBITDA from 5.6 times in FY23 to 2.7 times in FY25. So we've seen, again, a very good increase in innovation-related work this year. It crossed over 50% of our CDMO revenue, and we've seen a strong growth in our differentiated offerings and our unpatented commercial offerings.
Okay. Well, Nandini, I just wanted to, drill down on biotech funding, the scenario in the US. How did that impact you all this quarter? Was there any kind of improvement?
So I think overall there has been an uneven recovery in biotech funding, and I will say there is a lot more uncertainty going forward. So we have seen decision-making continuing to sort of be prolonged. But I will say there is reasonable biotech funding for late-stage clinical assets. So that's where we've seen the good order demand there. But I would say the early phase biotech funding still remains uneven.
Okay. Could you just give us more details about the inhalation vertical this quarter, as well as your ADC platform?
So the ADC platform, I think we've seen a lot of growth there. It's a very hot area. We've seen growth both in the standalone Grangemouth facility, where we have the bioconjugation, but we are offering of integrated services, which includes the payload linker, the fill finish services at Lexington, as well as the early phase MAB platform in Yapan, and a peptide facility at Dubai. We've actually seen very good demand there. So I think we're one of the first people. We've done bioconjugation for about 20 years now, and amongst the commercial assets that are on market, we've actually had a hand in a lot of them. So I think people come to us for the science, and they come to us for the customer flexibility and the customer service that we show.
All right.
In our inhalation anesthesia, we've also seen reasonable growth. We actually opened our commercial facility at Digwal in Telangana in March. And we should see that actually coming on stream. I mean, we've done some sales so far before the end of the year, and we should see more impact of that coming on stream for the rest of the year as the regulatory submissions happen.
Okay. Your OTC business did well. It was up around 15%. Can you tell us more about the India consumer healthcare segment? What led to this growth, and what are you projecting?
So overall, India consumer healthcare business reached 1,000 crore milestone for us, and I think that's in a way a significant milestone because it demonstrates the scale of the business. We've seen our power brands, which are Lacto, Littles, iPill, also grow at about 20% over the year, and it's a mix of astute media and trade promotion that we've been continuing, but also new products and new SKUs that have contributed to this growth.
Okay, all right. That's on the India consumer healthcare segment. But the roadmap to get to $2 billion and 25% margins by FY30, how would you propose that? What's the roadmap?
I think overall, we're still excited and we still believe that we're on track for the FY30. But I will say that there is near-term uncertainty, whether you say the macros, overall macro, whether we talked a little bit about uneven biotech funding over the year, as well as, trade and tariffs. So I think I would say that the next year in the short term might be a bit uncertain, but once the uncertainty resolves, I do believe that we have one of the best networks. Especially we've been investing in the US for a while. We just actually said we're going to do a $90 million investment in Riverview for the payload linker, as well as continuing to do a sterile fill finish in Lexington. So we have the capabilities and the capacities. If people decide they want to onshore in the US, we do have those available.
Okay, all right. The company is looking to invest $90 million to expand 2 US facilities. What is the strategic rationale behind that?
So we talked a little bit about the ADCs, right? They're, again, a hot subject. The Riverview facility has the ability and has done some work in payload linker, which is part of the ADC and the integrated offering. And we're expanding those facilities because we've seen our clients actually want us to do more in that. So that's something that will actually come on stream over this next year. The Lexington fill finish, again, is a sterile injectable facility that we have customers there that are doing work. And as those projects actually go through the pipeline, we were running up against our own capacity bottlenecks. So as these customers succeed, we would like to keep them rather than having them go elsewhere. And so that's why we're doing the expansion. Now, that will take a bit longer. It will take at least till, calendar year 27 for it to come online. But that's something we're quite excited about.
Will costs increase for Piramal Pharma with onshoring? And is this in line with the broader trend of the US government asking for increased onshoring?
I think overall, I will say it's a bit too early to say about how the US will respond. So, but I will say that there are various customers that are looking at supply chain diversification and how do they want to continue to manage their supply chains. I will say that yes, costs are higher in the US. For manufacturing, but for on patent things, the prices in a way are also higher. So customers do understand and do manage and where the costs are.
Okay. What is your sense in terms of the executive order from President Trump? Do you think that is going to be beneficial for companies such as yours when it comes to opportunities to reduce cost of production?
I think right now, honestly, I'd say it's a bit too early to say of how it will all shape out because it is a statement of intent, but we have to understand the details behind it.
And the expectations on tariffs?
Again, I think too early to say as to what it will shake out to be.
Okay, all right, fair enough. Is Piramal working on any GLP-1 drug opportunity?
I think that the focus is we're continuing to focus on our peptides and we'll work on what our customers want us to do.
All right. Semaglutide is going off patent in many countries. Lots of CDMO players have said that it is an opportunity for them. Where do you stand?
I think at the moment, as I said, I don't think we're working on something right now.
Okay, all right. That's a tight-lipped Piramal Pharma there, but nonetheless, they would be expanding two of their facilities in the US markets. That's what they've mentioned should come on stream probably by 2027. The stock is down around 4% at this point in time. Debt figures continue to remain high at around 4,000 odd crores for that particular stock. Well, we'll take a short break and come back with a lot more. Stay tuned.
Welcome back. Flitting between red and green, we have PVR Inox, which has now moved to the high point of trade. It's just a big surge that we're seeing. Are people going back to the movies or not? Something we'll keep an eye out on. The stock has actually done okay-ish this week, up around 6.5%, 7%. But Ixigo is the other one, Latravenues Tech, as we know it. It's reacting to its fourth quarter numbers, and solid set of numbers coming in from Ixigo. If you look at it, the strong fourth quarter performance was led by higher train and bus bookings. Also, flight and hotels bookings growing on a low base, and you had some contribution coming in from the Mahakumbh in the quarter too. So if you look at the reported revenues and the EBITDA of the company, 72% growth in their overall revenue. Margins have come off a bit, but remember the EBITDA has grown 58%, and on a favorable base, the net profit has more than doubled. 128% growth is what we've seen out there. If you look at the key internals as well, gross ticketing value has grown by about 65%, and flight and bus, both of them have seen a gross ticketing growth of 92%. And we're talking about the Kumbh impact, while on an overall basis, it contributed just mid-single digit of the gross transaction value that can be attributed to Kumbh. But if you look at it over the years, during this period, bookings to Prayagraj, where the Kumbh was happening, surged by 20 times for buses, 5.5 times for flights, and 4 times for trains. So it did see a big surge. The other interesting parts, it was a lot of solo travelers and a lot of Gen Z travelers going to the Kumbh this time. Solo travelers made up for more than half of the train bookings to Prayagraj, and 50% plus of all visitors to the Mahakumbh across all modes were all under 30. So that leaves out, a big runway for growth for spiritual tourism in India. That was an interesting insight that we got from there.
Okay, all right, interesting there. But let's keep it with interesting insights. And this is our Insight Edge segment. Manglam, you're focusing on Tilaknagar Industries. Tell us why.
Yes, on the one hand, you have the rise for spirits growing, and the other, you have the rise for spiritual tourism growing as well. So that's interesting. In India, everything happens, right? Tilaknagar Industries, 13% growth in their revenue, 62% jump in their EBITDA, margins growing by almost 600 basis points, and we have the net profit growing by 145 points. Remember, a lot of it has to do with the subsidy as well. Even if you adjust for that, the EBITDA's moved to around 65 crores and the net profit at 64 crores, which is a big booster that we've seen compared to last year. What is it that led to the 20% volume growth? Remember, we had the shift in Andhra take place when it comes to the route to market policies. So the fourth quarter volume growth of 20% was led by a volume growth of 33% in Andhra, which is among the key markets for Tilaknagar Industries. And they said that next year as well, they will continue the volume momentum in high teens, which will also reflect in their revenue growth of high teens. And margins would expand to 15.5% to 17%, despite them spending more on ads on account of premium launches that they're doing. And this is a, by and large, brandy company. Last year, they did 95% of their revenues from brandy. This year, that contribution has come down to 91% because of them moving into whiskey-flavored products, some gin, etc. as well. And now they're believing that by the end of this decade, by 2030, the brandy contribution will go down to 80%, making it a whole fuller portfolio while still being positively skewed towards brandy itself. Let's listen in to what the management of Tilaknagar Industries said to us this morning.
We have bounced back quite strongly in quarter four with the overall volume growth of 20%. Of course, the growth in Andhra Pradesh would be in excess of that. I think that's looking more like 30-35%. And, with the strong momentum build up in quarter four, we're carrying this forward into quarter one and this fiscal year as well. I think the volume growth for this year will largely mirror, the quarter four volume growth. I think we expect clearly high teens volume growth for this entire year, and our revenue growth should roughly, track the same percentage. I think going forward, the NSR will, remain largely in the same range. I think while we do get the benefit of premiumization and selling some premium brands, but we did a price correction on our flagship brand in Andhra Pradesh in November. So, that was done in line with, the competitive movement in that category. So that price correction now we'll have the full year effect in this year. So, by and large, the NSR will remain same. And the margin outlook also, will be around 15.5% to 17%. That is the outlook which we expect for this financial year. We have few premium launches which we have already done. We launched Monarch, which was a luxury brandy in September of last year, and we intend to launch a luxury whiskey in the first half of this year. So, the premium brands, the first year, the advertising and marketing is going to be slightly skewed. So, with increased ANSP spends, that will put some downward pressure on the margin as well. The previous year, brandy as a percentage of our portfolio was closer to 95%. So we've made some progress in this year now where brandy is 91%. And, our vision is that, by 2030, which is say, 3-4 years from now, brandy will still continue, being the core of our business, but we expect it to be around 80% by 2030.
Okay, all right. Well, let's move on. Muthoot Finance is under pressure despite a good set of earnings in Q4. Their AUM saw good growth and they have maintained their gold loan growth guidance for FY26. Earlier today, we did speak with the MD of the company. Let's listen in.
There are always fluctuations in gold prices. Maybe goes up, goes down. But over the last years, it has always been going up only. But of course, in the last 6 to 7 months, it has gone up too high. Probably it may cool down a bit. But of course, we give only 75% of the current value. And that also is a 30-day moving average. So today, if you look, our gold loans advance which are given, it's only 62% of today's price. If you look at the value of the gold we have with us and today's gold price, it's only 62%. So that is the margin or the headroom we have. So some corrections in the gold loan will not be affecting us. We have been maintaining our spread. NIM should be about 11%. Spread should be in the 9.5%. I think in the last 4 or 5 quarters, our spread has always been 9.15. And we actually maintain it. If the cost of funding goes up, we try to absorb it for 1 quarter or so. Afterwards, it's still going up. We increase our yield, but we maintain our spread. The same thing if the cost of funds. Today, the cost of funds is coming down a little. So it will take for a few months for it to maybe stabilize. If it is really coming down, we will reduce our yield, but maintaining our spread. So if there is an advantage in the borrowing cost, we pass it on to our customer. That is what our NIM and spread, etc., have been almost constant in the last several quarters.
All right. As we speak, there are important flashes coming in from the Prime Minister's office. The Prime Minister has actually chaired a meeting to review the progress and future plans of the fisheries sector that has a positive rub-off on names like Apex Frozen, you have Avanti Feeds, you have Waterbase. All those stocks have seen a bit of a spike as soon as that flash hit the ticker. But we have Wendt, which is a stock which is moving lower today, and that's because it's announced some direction on what was earlier said, the promoter beginning to pare down its stake in the India business via an offer for sale that opens for non-retail investors today. And the floor price is a steep discount to what was the earlier price of this stock. So today is down 14%, but the floor price is 6,500 rupees is still a lot lower. Vamakshi joins in with more on that. Vamakshi.
Well, Mangalam, absolutely. Wendt is taking a knock in the trading session today on the back of that OFS announcement that came through from the parent. Keep in mind that the parent itself had announced back in Jan 2025 that they will be looking to sell their 37.5% stake going forward, and it has materialized right now. The base size of the OFS is at 30%. They do have the option to upsize this by almost 7.5% to 37.5%, selling their entire stake in the company. The floor price for this offer has has come in at 6,500. This is coming in at a steep discount to the closing price yesterday. It's a discount of almost 38%. The offer size is at 487 odd crores, and it opens for non-retail investors today. It will be open for retail investors tomorrow. But because given the kind of chunk that is coming into the market, as well as the kind of discount that it's coming at, the stock is taking a knock in the trading session today.
Okay, all right, Vamakshi, thanks very much for that. Well, we need to take a short break, but on the other side, Manisha Gupta will join in with her. She has the Chief Operating Officer of Gujarat Ambuja Exports. Stay tuned.
Welcome back, and joining us on the show now is Shriram Gupta. He's Chief Operating Officer at Gujarat Ambuja Exports. Shriram, hi, good to have you on the show. We've been talking about ethanol, but more in sense of sugar. But what really seems to have taken precedence and how is the maize? Because when you look at the production numbers there, we're looking at very strong numbers coming in from maize right now. How do you see, first of all, this disruption, and what are those numbers right now?
Hi, good afternoon. So maize has been a very important topic, which is circling around the commodity circle for the last 2 to 3 years, predominantly because of the ethanol sector. The ethanol sector has rapidly grown in the last 4 years, consuming from less than 1 million tons in 2021 to more than 9 million tons this year. The total corn crop in India is somewhere roughly about 30 to 34 million tons, which is at least 15% less than the government estimates of 40 million tons. But the ethanol sector, from the shift towards grain ethanol, which was predominantly a sugar-based industry, had created a crunch last year, which forced a lot of people to face extremely high prices, along with people importing about 700,000 to 800,000 tons of maize from Ukraine and neighboring countries. So maize till FY24 and in the first quarter of FY24-25 has seen a very big pressure. However, currently with the new Rabi crop in place and with a bumper Kharif crop, we don't seem to have a very big pressure on maize this year. The Kharif crop was roughly 23 to 24 million tons, wherein the Rabi crop is expected roughly 11 to 12 million tons, which is about 25% higher than last year's Kharif and Rabi crop. So last year, the Kharif crop was roughly 18 million tons, and the Rabi crop was roughly 9 million tons. Now the 27 million ton crop with 8 million ton of ethanol demand created such a big panic last year that people didn't know what to do. So they resorted to paying higher prices, importing the raw material. However, in a very short span, due to government initiatives, due to private companies taking up charge to, encourage farmers sowing the corn crop, and subsequently, the farmers were also realizing good margins of corn, because if you just look back around the pandemic, the corn price was about 11 to 12 rupees a ton. Today, it is sitting at 23, 24 rupees. And last year, during this time, and in July, August, it went up to 28, 29. Now, when the farmers see such a dramatic shift in the pricing, certainly they will be more motivated to, replace that existing wheat crop, soybeans crop, and to some extent, in some states, even rice crop, and shift to corn crop. So all that has now given us a crop which we feel is sufficient for the Indian demand of maize.
Clearly. Shriram, we do understand that Gujarat Ambuja as well, when it comes to maize processing, seems to be increasing capacity. Absolutely. What are the kind of investments you're putting in? Where do you stand right now, and what are the targets?
So Gujarat Ambuja Exports currently consumes about 4% of India's maize, which is roughly 1.3 million tons. Our current processing capacity into the maize starch and maize derivatives business is roughly 4,000 tons per day. We just inaugurated a new plant in our Sitarganj unit, which was about 1,200 tons per day, ramping up our existing 4,000 tons per day capacity to 5,200 tons per day capacity. Our investments in the maize division have been quite consecutive since 2010, wherein we set up our unit in Karnataka. So looking forward, we feel that the maize crop and our capacity should align with the India's demand. We are further diversifying into a fermentation sector, wherein fermented products, which are huge amount of import substitutes made from maize, we're going to try and make it in India, which is going to be another vertical of ours. It is all going to be derivatives of starch as well as maize. So we feel the maize sector still has a lot of potential. The starch industry from about with a capacity of 2 million tons in 2010 today stands at 7 million tons, which is also going at an increasing pace. However, last year, due to some challenges, there was some dent in the consumption demand due to high prices of the finished products, high prices of the raw materials, difficult for smaller industries to sustain. However, we feel that that was a short duration of time and things will materialize, fall in place, the demand will adjust, everything will adjust in the coming quarters, because the farmers have really supported us this time. Because a kharif crop of 23 million ton and a rabi crop of 12 million ton is something which is way beyond our expectation. So the industry is quite happy in terms of the maize availability. Even the ethanol industry is quite happy because now they also have a substitute of FCI rice, which the government is committed to supply about 4.8 million tons of FCI rice to the ethanol sector for ethanol making. So the ethanol sector is happy because they have a substitute crop. The poultry sector is getting maize at reasonable prices. The starch industry is also getting good availability of maize.
Well, this year, the kind of numbers that you're giving us, Shriram, it does look quite positive. Last year was a bit of a scare, but as you've told us that the prices from 28, 29 have come down to 24. But I can tell you this, Mangalam, that corn clearly has been a hero when it comes to ethanol. Not so much sugar, but rice is picking up and maize absolutely killing it there.
Yes. I take that point. Thank you so much for taking us through with that conversation, Manisha. As we do that, let's look at the bottom of your screen. Interesting source-based information coming in from our colleagues. Yash says that NSE has 1 lakh shareholders. So it's become the largest unlisted or widely held unlisted company. Everyone's awaiting the NSE IPO. That flash at the bottom of your screen. The NSE has 1 lakh shareholders now, and it's an unlisted company. Take a short break, come back. On the other side, we have Business Lunch taking all the market action ahead.